Hey everyone, Douglas here, and welcome back to the MMT Macro Trader. I am back myself after a couple week break from doing YouTube stuff. I've been spending that time doing some pretty cool research and kind of building up a few things that I will be planning on publishing very soon on the YouTube side of things. So if you like what I'm doing here, I've got some exciting stuff to share in the coming weeks. Make sure you subscribe, turn those notification bells on, and I promise it will be worth your while. If you like MMT, especially if you like some of the dealer hedging stuff, the gamma stuff, a lot to discuss. Again, coming in the future very soon. With that being said, we have a lot to cover. The last update I made, I think, was November sometime, and we were looking at a potential sell-off materializing in the NASDAQ. I think it was the last video that I posted. And boy, did we get it, and then some. We've seen a ton of selling, ton of volatility play out over the last couple months here. And the big question is it like going to end? And I'm going to make the case why I think it is more likely than not that we likely saw a bottom print heading in or into come last Friday, and that the likely path forward is to see a substantial rally from here. But there's a few considerations to be had, a few things to keep in the back of your mind, and just kind of watch as this week progresses that can dictate what is going to happen from here. If you find any of this stuff interesting and you want more detail, make sure you check out my Patreon page if that's something that you're into. I went into a very deep discussion on every point that I'm going to make here kind of briefly, and a lot more detail on tonight's macro update, which I just posted. So a couple things to keep in mind in terms of where we are at right now. One of the things that we saw happen and play out through the month of January, we even saw this to a certain extent back in November and December, is we've been stuck in a negative gamma situation, a negative gamma market. And the point of this is, and I've gone over this in prior videos, my GEX video, I think if I remember, I'll make sure and post a link to it in the description below. But one of the things that happens is, particularly as more and more puts get bought, but depending on different distributions of hedging that has to happen, dealers can actually get themselves into a situation where, as the market drops, they are forced to sell more shares to continue to hedge their books. Remember, when you make a trade, you're trading with a dealer. You're rarely trading with someone else on the opposite side of the trade. You're trading with a dealer who doesn't want the directional exposure that you want. They don't want to bet if the markets are going to go up and down, and they hedge this via their hedging activities by buying or selling the underlying, which is usually the S&P or some function of the S&P. And so we've been stuck in this negative GEX situation, which is why we've seen the sort of selling that we're seeing. This is just kind of the first point to make and keep in the back of our heads. Low GEX, right? A very low GEX or a negative GEX corresponds to a very high or a very volatile distribution in prices, both high and low. So low GEX doesn't necessarily mean that we're going to see continued selling. What it does mean, though, is that we just should expect really large swings in prices, and consistently we see that. It correlates very strongly. If you ever look at the Squeeze Metrics white paper that they have and the other data that they distribute, you can see that play out very clearly in the data. So there's that component of it. So where we're likely at is the situation where we're in this low GEX situation, and the question is, okay, what gets us to the point where instead of continued selling, when do we finally get buying to occur? One of the things that has to happen, or usually happens, or usually corresponds with this window of opportunity for buying to kick in, is OPEX. And we just went through OPEX weekend. Friday was the end of S&P options for the monthly cycle, and then Wednesday was VIX options. And so what this does is, again, as I explained in that GEX video, is this kind of sets the stage for a lot of this GEX to go ahead and roll off. So we kind of get a bit of a clean slate heading into Monday or Monday's trading session, or into the following week's trading session. So if we do get a bid, then there's good reason to believe that that bid can kind of sustain, and then the hedging activity that comes after that bid happens will reinforce that market usually to the upside. The quintessential example of this, if I go to the max data here, is back during the COVID sell-off, which literally bottomed. I think it was March 23rd or something like that, which was OPEX, and the following week we took off from there. So that's one thing that definitely leans towards the bull's case right now, and then that we'd get a bit of a bounce, is that we did hit OPEX. The next thing is, are we just seeing things that are other kind of broader macro indicators? Are we seeing those indicators point towards some sort of bid? A good measure of this is the dark pool index. Again, if you look at some of their data, I believe it's 45%. Anything above a reading of 45% has fairly strong forward-looking returns. I've done some of my own research. This is some of the stuff I'll be putting out in the not-too-distant future. Already out there on my Patreon page, again, if you're interested, that shows some of this correlation, again, very, very strong into the future, or into forward returns in terms of where the S&P is. So relatively speaking, we've seen a stronger than to be expected dark pool index, given the selling that we've seen. And one of the things I'd like to look for is a bit of a divergence between just kind of the general recent trend of the dark pool and then price. So we're seeing that. Another tool that I have, and I'll go ahead and show you this, and I've been putting this together again. Some of the stuff I've been piecing together with the time that I'm not been making these YouTube videos. And this is the GEX by DIX ratio, and it's priced adjusted. And effectively, you can see that whenever it gets negative, whenever we dip below the zero line here, it's a pretty good indicator that the selling that we're seeing is about to give way. And actually, if you look at this on a distribution like scatter plot chart, it's an amazingly effective signal for forward-looking returns. In other words, the bottom is likely in, right? It's a higher likelihood than just 50-50 that the bottom is likely in. So we have a couple things that are really kind of leaning towards a more bullish resolution to the recent selling that we're seeing and a bounce heading forward. That is the fact that we have passed OPEX, so there's kind of a clean slate from the reinforced selling gamma that we've been seeing. We have this extreme on the GEX by DIX ratio signal. And things are just setting up for the potential. The final thing to keep in mind, and I'm going to switch back to the S&P chart while I talk about this, the final thing to kind of keep in mind is we do have a very important rate decision that will occur on Wednesday, and the Fed will obviously have a lot to say both about QT, taper, and their kind of future the future actions they're going to be taking. And one of the things that happens heading into very big news events is you see a lot of put buying heading into those news events. And again, that put buying, when those puts have to be hedged, that can oftentimes, depending on exactly where the whole distribution is of dealers' books, that can add to reinforced selling or just selling of the underlying, the S&P, that adds that can kind of start rolling like an avalanche, right? It kind of catch on fire and just kind of take off. And so in part, I think we've been seeing a little bit of that as well. And again, in the macro update, I made the case that it kind of is very similar to what we saw back in the election, heading into the election in 2020, right? We saw a couple month period of selling and kind of just sideways movement, ultimately giving way when that big news event gives way because those puts finally get closed out. And then eventually you get that big Vanna pop where the roll-off of the most out-of-the-money puts begins to get closed out. And then when those puts get closed out, the dealers can buy back those hedges, so the short positions get bought back, and you can get this absolute ramp higher. Again, a great example of that Vanna ramp would be the pop that we saw back in November of 2020 after the election. So there's certainly a setup similar to that could play out. The big caveat here is that if that doesn't play out, then we are still in a very negative GEX situation. And if instead of a bid, we end up getting more selling, then volatility could just kind of continue to hold for quite some time, and it becomes a very dicey situation heading into the future. The big takeaway is we're likely going to continue to see a lot of price volatility in terms of just the overall swings into the next few trading days, with a higher likelihood than not, again, kind of given everything that we've looked October, that we will see a bit of a catch here. So we'll see how things play out. I think the best the best kind of strategic takeaway is it's probably better to take smaller risks right now than larger risks, just given the overall situation. We are very much on the opposite side of a market where we can consider low volatility and kind of that slow grind higher. Obviously, we are in a situation where big swings happen, and so that seems to be the dynamic at play. So yeah, those are my thoughts. Probably covered a lot tonight, and we will see how things play out. Again, just want to make it clear, I'm not calling for an absolute bottom here. Maybe things get dicier. I went over a lot of reasons in that in the Patreon macro update tonight. Again, if you want to check that out, if you are a member and you haven't checked that out, make sure you do so. Just a couple other kind of highlights. Fiscal flows have really died down over the last few weeks into January, in part because of just massive tax receipts, the highest tax receipts we've ever seen. And once that gives way, that can also take a little bit of the headwind that we've been seeing just in the market in general. And I expect that to give way. So just a few more points why I think this leans towards a bullish resolution, but still a lot of risk in front of us going forward. We'll see how the rest of the week plays out. See how the Fed, what sort of decision they make. Again, just to kind of reiterate on that point, the Fed could say something very crazy that the market just doesn't like, and those puts never get closed out. We never get the Vanna pop, and we just get more reinforced selling. So there is very much that possibility as well. Anyway, that's kind of my thoughts on where we're at heading into a very important week. Like I said, I'm back. I'll be putting some more YouTube content out there at a more consistent level. So if you're not subscribed, make sure and do so. Turn that notification bell on. And if you found this update particularly helpful, give it a thumbs up. I would greatly appreciate that. And if you made it all the way to this point, you probably like what I'm doing here. So if you haven't yet checked out the Patreon page, patreon.com/MMTMacroTrader. And you can check it out there. All right, I'm going to wrap things up here. Good trading, everyone, and we'll talk to you next time. Bye-bye.